Hi, I'm Hedgeye founder and CEO Keith McCullough. I'm excited to announce the Hedgeye on the Prize tournament. I challenge you to compete in this simulated investing tournament to win some serious money. We'll be awarding weekly and monthly cash prizes along with the big grand prizes. Along the way, we'll teach you how to take your investing to a whole new level. I hope you'll join us. I'll be coaching you every step of the way. So when you look at part A of the move, okay, that's when the breakout from October into November, we made that call. That was quad 2 in Q4. So quad 2 equals Q4 of 20, that was 2020, okay? That's when, the Russell 2000 basically went from wherever it was there to a new cycle high of around 233 on the IWMs. So IWMs went to 233. Which is equivalent around 2360, 2350, I believe, on the Russell 2000. Then you had a correction in May. That's where the market started to say, okay, I'm going to start to unwind some of these epic gains where everyone was feeling really good about it right on time, I mean, by the end of the first quarter. And then we shot back in early June, back to 2 times we got towards that number. Yeah. So that was the first, I stayed with it the whole way, but it was kind of painful in May. Because the things, and that's very typical of things that go vertical, just like natural gas did. Oh, and then everybody on CNBC is talking about natural gas at $6, and it goes back to $5.
Yeah, and
natural gas is still bullish trend, but do you stay with that trend or do you not? So that was the month of May, but by June, you equaled 2 times this thing, 2 times. It was the same level. Then the real risk management exercise started, which was, again, exactly right. The sell-off from the end of June, really, quite literally, the end of June, right on the screws. July's in Q3, quad 3 in Q3. That was the beginning of the decline, and that was a very painful decline. Yeah. So in the first 2 weeks of July, I started taking losses, and I said, look, I don't want small cap factor exposure. Get it out, get it out, get it out. And I have a lot of clients, and including, like I said, I've already mentioned enough times, where they just wouldn't listen. They like this. Playboy is a great example of it. I mean, Dario is another one, DRIO, which Tom highlighted again this morning. I said, well, what changed in these companies? Nothing. The shareholders selling at the low of quad 3 is what happened, right? When they eventually couldn't take any more losses. And then voila, right on time, at the end of August, the Russell put in its big higher low and has now taken off back to, here we are back in quad 2 in Q4. Equals 233 on the IWM. Right? So what was the lesson? The lesson was quad 3 really did matter to that factor exposure. The higher the short interest, the smaller the cap, the bigger the story, the bigger your performance problems. Now you can sit there and be really complacent about this and say, well, I had it right all along. No, you didn't. You did not. The people that navigated that perfectly did, which are few and far between. Yep. And next time I see that, I want to do better than what I did because I should have been quicker in the first week of July than I was. I'd have to go back and see what the actual timestamps are. But I had to yard sale a lot of stuff. And then I just got long of the right quad. And then I made a beautiful quad pivot in September, on September the 23rd, back to quad 2. So again, you're going to make mistakes. You absolutely have to make mistakes or you're never going to learn or your name's going to be Bernie Madoff or both. Right? So again, these are the days of our lives. Hopefully that was helpful. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.